Welcome to the InterMarket Analysis video update. This is a weekly video that I do where we look outside of the S&P 500 and a bit out of the stock market to see how are other actions influencing the stock market. So we look at the bond market, we look at commodities, and a whole range of different markets just to get an idea. No market operates in a vacuum, and there's pushes and pulls within all of the markets, even as they interact with each other. This is being prepared for Monday, January 23rd. The first thing I look at is stock market valuation of the S&P 500. The first thing that I look at is the valuation of the S&P. We're still pretty expensive on a historical basis. This red line is a PE ratio of 20. Now this is looking back. This is the trailing 12 months. The stock market looks forward, but we can still get some insight by looking back. When we're above this red line, the PE ratio, which is already considered to be expensive, when we're above that, that means we're even more expensive. If we were to drop down to this blue line, that's a PE ratio of 15, and that is considered to be fairly valued. If we drop all the way down to the green line, that's a PE ratio of 10, and stocks are considered to be undervalued at that point. You can also see where the S&P has gone up and down, and we could remain in an overvalued situation for a long time. Here's another chart just showing you different historical events that have happened and how the S&P behaved during that time and what the valuations did. You'll notice way over on the right-hand side that we're seeing a decline in all of these dashed lines. That's because the earnings per share has been coming down as the earnings have been released. Looking at growth versus value, here is where we look at the pure growth index. This is just growth. It is in a downtrend overall because the blue line is below the red line. The blue line is a 50-period moving average, and the red line is a 200-period moving average, and that'll be the same through all the charts that I look at. Here is the value index showing that we just had a recent golden cross, and it is in an overall uptrend. When we compare growth with value, we see where growth has been underperforming and value has been outperforming. Here's another look at that same thing, showing how growth has been really underperforming, where value has been outperforming. And then another look at that shows looking at ETFs, where growth has been underperforming, value has been outperforming. And then the last one just shows some indexes compared to the S&P. Growth has been underperforming value. The reason I look at a lot of different things, an index, ETFs, just to get a little different perspective, because sometimes when looking at these charts, we can see things a little bit different, and that might give us a clue as to what's actually going on. Some other markets that we look at, the 30 biggest software companies are still in an overall downtrend. And looking at inflation and deflation, a ratio between the two. When this is going down, that means we're in a more deflationary environment. When this is going up, that means we're in more of an inflationary environment, and we're coming right back up to the moving average now after having gone down. So according to this, and this mainly measures different commodities, that we're starting to see some rebound here, and that could produce some inflationary pressures. Another thing we look at for inflation is a thing called the Baltic Dry Index. How much does it cost to ship products from one place to another? When this is going up, that means the price of that shipping is going up. When this is going down, that means that the shipping costs are going down. Right now, we've been in an overall downtrend since early 2022. Another thing we look at to measure inflation is commodity prices. After really going up from 2021 and 2022, about halfway through the year, they reversed and started to go down, and now they're in an overall downtrend. Corn, and I don't have any studies on this chart, I just look at the price overall. After spiking up and coming back down, it has been rebounding slightly, but not spiking currently. Aluminum, after really spiking up, has also been coming down, but is beginning to show some rebound. Heating oil, after coming up, has been coming down lately. Gas, after spiking up, coming back down, is starting to go back up again. Natural gas, after really spiking up to 10, has come all the way down to 3.17. Oil, after dropping below $80 and getting all the way down to 70, is now coming back up, and it's over 81 now. Another thing we look at are diesel prices. This is what it takes for 18-wheelers and trains to move things from point A to point B. This is still pretty high overall, but it is coming off of the really high reading that we were seeing earlier in 2022. Wheat really spiked up and has been coming down. Another thing we keep an eye on for inflation, because wheat is the basis of so many products. Another thing that's the basis of products is fertilizer, where it really spiked up. It's been coming down, but it's still pretty high overall. Lumber has been in a real downtrend. There's a joke in there somewhere, but it has been bouncing up a little bit lately. The dollar is also in a downtrend. It was really strong from 2021 into 2022, but has since reversed, and we're seeing a recent death cross. The euro, which had been declining, is now advancing against the dollar. And the Japanese yen, the same thing. It had been declining, but then advancing against the dollar, as is the euro, where the dollar was really going up, and now it's going back down. Here's an isolated chart of the British pound showing that we have a recent golden cross. Copper, this is another thing that's a little contradictory. If all of the things that we're looking at, which are predicting that we're going to go into a recession, you would think that copper would be going down, because copper is considered to be, they call it Dr. Copper. If it's going up, the economy tends to look more positive into the future, and then vice versa. Well, what's happening here is we have really seen copper go up, and we're starting to see a golden cross. When we compare copper to gold, copper has been outperforming gold. And then here's a longer term chart where it's been going up against gold. And then we compare this to the 2-year yield. The spread between these two is still pretty wide, where they have a tendency to not get very far apart, even though they're on different scales. And they have a tendency to go in the same direction, where lately they've been going in opposite directions. Gold just gave us a recent golden cross and is in a nice uptrend. And silver also has a recent golden cross and is, even though it's going sideways, is still in an overall uptrend. Looking at some indexes, the CRB index compared to the S&P 500 shows that it is now starting to underperform the S&P, where the S&P is starting to outperform the CRB index. And the NASDAQ 100 is underperforming the S&P 500, but we are seeing a bit of a rebound here, but not enough to change the long-term trend. Looking at some other stocks, we have the mega cap growth. These are the big ones, the Google, Apple, Microsoft, the really big names. They are still in an overall downtrend. And the S&P 100 continues to underperform the S&P 500, but it is showing some recent improvement. Small caps continue to outperform the S&P 500. They're in an overall uptrend, even though we've been chopping more or less sideways. The low volatility stocks, these are ones that hold up better when we're in difficult market conditions. We're starting to see a golden cross here and an overall uptrend, even though we've been chopping sideways for a lot of 2022. At least they've been holding up better than the other growth stocks that have really gone down. When we compare the low volatility stocks to the S&P 500, it's still in an overall uptrend, even though it's seeing some recent weakness. And looking at the Dow, the transports and utilities together, which form the Dow Jones Composite Average, we're seeing a recent golden cross and trying to establish some kind of an uptrend. Here's Dow theory, where we're seeing a little bit of divergence here between the Dow and the transports, where the transports made highs before the Dow. Here, they're going a little bit more in lockstep, and then utilities, which had been showing some real weakness, are now starting to come back, and then saw some other recent weakness, but continue to show a little bit of a bounce recently. The FANG stocks, this is Facebook, Amazon, Apple, Netflix, Google, and then some other ones, still in an overall downtrend, even though they were up 4.7% on Friday. ARK just is in all kinds of trouble and still is in an overall downtrend, even though it was up almost 5% in Friday's session. Looking at bonds versus stocks, we're starting to see some improvement with bonds. This is the bond ETF, which is bond prices. When prices go up, interest rates go down, and we're starting to see a real bounce in the price of bonds, and potentially we could be getting close to a golden cross. Also, looking at the Pring World Bond Index, after it really was going down, it's starting to bounce up. Not enough yet to change the trend, but is showing some real improvement. The stock to bond ratio on a monthly chart, where stocks had been really outperforming bonds, it's starting to come back down now. The trend is still intact, but if we see follow through strength in bonds and weakness in stocks, this could really start to come down. But this chart really isn't showing us all that much. When we look at bonds versus stocks, this is pretty much chopping sideways and not showing really any strength yet. The stock to bond correlation is pretty much neutral now. When we go up to 1, that means they're going in the same direction. When we get down to -1, they're going in opposite directions. This 0.25 to minus 0.25 I consider to be more neutral, and we're right at 0.25 currently. The 10-year Treasury yield, after spiking up, has been coming down and it's currently at 3.484%. The corporate bond index is starting to show some improvement and getting close to what could be a golden cross. The 30-year yield, after spiking up to 4.4%, has been coming down and is currently at 3.66%. And here is another chart of the 10-year yield, showing that we're at 3.484%. The S&P 500 has really been underperforming the rise in interest rates, and that's why we're seeing the S&P in an overall downtrend when you compare that to the rise in interest rates. The junk bond ETF is coming really close to a golden cross, and this tends to follow the stock market. This could give some support. Some folks get into junk bonds because they have a better yield, but there's also more risk with that. But this could be potentially positive for the market. Looking at the junk bond ETF ratio to the bond ETF ratio, junk bonds have been really outperforming bonds. We're seeing some improvement in bonds, but junk bonds still continue to outperform. And this is a daily chart showing how, for the most part, in the last week, interest rates have been coming down, but in Friday's session, they went up. Here's a weekly chart showing how the US, UK, and German rates are spiking up and starting to come back down. Japan's pretty much in its own little game right now, where they're having some real problems that may come to the forefront, and I've just been keeping an eye on that situation. If it becomes more prevalent, I will definitely be talking about it in the videos. Looking at the S&P against some other sectors, here's the S&P to utilities ratio. We've been chopping around, but what we're waiting for is if we really see the S&P start to outperform utilities, a lot of times that marks a bottom in the S&P and then a real advance. And you can match that up with where we've seen other bottoms in the S&P. At the same time, when we spike up and start to come down, that oftentimes marks a top in the S&P 500. Well, we've just been chopping around here recently, and that pretty much shows why we're in a trendless environment at the time I record this, and have been in a trendless environment for quite some time. The staples sector, even though it's seen some recent weakness, it's dropping below both moving averages, is still in an overall uptrend. When you compare energy to the S&P, energy has been outperforming the S&P 500, and the tech sector is still in an overall downtrend, but could be showing some improvement. Semiconductors looking a little promising here. We might be starting to see a golden cross in the near future if we see follow-through buying in the semiconductors, and that could really help the technology sector. When you compare tech to the S&P, tech has been underperforming the S&P. Some other areas that we look at, growth, which has really been having trouble, and bonds, which has really been having trouble. That's why we're seeing a lot of sideways action in this overall ratio and could be getting ready for a death cross here, where growth continues to go down if we see some more improvement with bond prices. The rise in interest rates has really outperformed the tech sector. That's why there's been a lot of pressure on tech stocks. And this just shows how the tech sector has really underperformed the rise in interest rates. Discretionary, the things that make life fun, have been underperforming staples, the things that you have to have that aren't necessarily fun, where staples have been really outperforming discretionary, and energy has been outperforming the tech sector. Gold has been starting to outperform the S&P 500, and gold is now starting to outperform the dollar. High leverage loans are really hanging in there. We just saw a recent golden cross and a real advance in this particular ETF. If we were going to get ready to fall apart economically, these are high leverage loans. People really, they max up the leverage on these things. If we were getting ready to fall off a cliff, you would not necessarily see this in an overall uptrend. Looking at our InterMarket Analysis chart, going back to the beginning of 2022, where oil has still been the best performer, followed by the dollar. Gold is showing some improvement, where stocks and bonds continue to be negative. Looking at some indexes, here's the Amex, the NASDAQ, and the NYSE. We take a 5-period moving average of their highs minus their lows, and even though we saw some weakness this past week, this is starting to show some improvement. You'll see this chart quite often in the daily briefs when we're really starting to look more positive. Also, the small cap index giving us a recent golden cross. Saw some weakness here, but it came down to the 50-period moving average, and then it's bounced up off of that. Mid caps also working off of a recent golden cross, coming right up to this R1 resistance. And then the Dow, also a recent golden cross coming right up to the pivot, where if we go above this, that would be more positive for the month. As long as we stay below this, that's more negative for the month. The diamonds, after really going up and looking well, switched over to neutral, then had a couple of really rough days, and they still are negative, even though they bounced back over 1% in Friday's session. The NASDAQ continues to be in an overall downtrend, as does the NASDAQ 100. But on a short-term basis, we are looking more positive with the NASDAQ 100. These are the QQQs, which are the ETF for the NASDAQ 100. The NYSE composite showing a little bit of improvement here, coming back above this 200-day moving average. And the Wilshire also showing what could be an improvement. We're still in an overall downtrend, but this is looking better. All stocks, we're just starting to see a golden cross here. And this is mainly due to stocks outside of the U.S. We're seeing some strength outside of the U.S. market. In fact, here's emerging markets. This is one of the areas where we've been seeing some recent strength. We're getting ready to see a golden cross. Then internationally, all of the markets pretty much are turning back up and looking more positive on this chart. Bitcoin also saw a little surge in the past week. It's actually been able to recoup what it lost before the FTX meltdown. And as I record this, it's up in the 23s, I believe. So it's seeing a bit of a bounce back. Some correlations that we look at, the S&P to the US dollar, having a tendency to go more neutral now, but a little bit in opposite directions. The S&P and oil have a tendency to go in the same direction, but that's relationship starting to come back down. S&P to the 10-year correlation is pretty much neutral, and we're getting more towards neutral when we look at the tech sector to the 10-year yield. And the S&P to the 2-year yield, you can't get any more neutral than that. So what are some things that are positive? And I went through and I updated this list. The value indexes and ETFs are still positive. Gold and silver are positive. Energy is positive. The high leverage loans, staples, the Dow, small caps, mid caps, and the low volatility ETF that's based on the S&P 500, the Dow Jones Composite Average, junk bonds, staples, all stocks, and then way at the bottom, which may be kind of hard to see, the emerging markets. What is still negative? Okay, growth in indexes are still negative, but we're seeing some improvement. It's pretty subtle. It's pretty deep right now under the surface. The software, the 30 biggest companies are still negative. The CRB index, the dollar, mega cap stocks, bonds are still negative, but we're seeing some improvement, just like we are with corporate bonds. The world bond indexes are showing more improvement now. The FANG index, as well as ARK, which will come up later, NASDAQ 100, the mega cap growth, semiconductors just getting ready. Could be seeing a lot of improvement with the semiconductors. NYSE comps, seeing more improvement. All stocks just getting ready for a golden cross. ARK, as I said earlier, Bitcoin is still negative overall. Even though it's bounced back a little bit, it's been down very heavily. The Wilshire Index is showing some improvement, but it's still negative. And I'm sorry for this chopping off just a little bit. Thank you. I hope you found this helpful. Please feel free to check out the daily brief as well as the weekly video. And then I also post what I call the deep dive, where I look at the charts that I don't always talk about in the videos because they're not necessarily telling us something, but it still can be helpful to look at those charts. Have a great week, and I'll talk to you in the next video.